So welcome to the webinar about the crowdfunding investment opportunity with Enerwhere. Good morning, good afternoon, or good evening, depending from where you are connected. This is a global webinar, and we have participants from the 5 continents. I'm George Lascas from the African Power Platform, and I'll be moderating the session. We appreciate the time you have availed to participate at this webinar, and we hope it will fulfill your expectations. Before we start, let me go quickly through some technical aspects. The participants are muted to keep the quality of the audio session and are invited to post questions through the Q&A chat box available at the bottom of your screen. If you experience any technical issue on viewing or listening, please reach out to us on the chat box and we'll try to help on fixing it. This webinar is being broadcasted live on the African Power Platform Facebook page, and it's being recorded. It will also be posted on our YouTube channel, so you can access it anytime in the future. We'll share you the link after the session. So now briefly about the African Power Platform, the organization hosting the webinar and co-organizing with Enerwhere. Our mandate is to support the electrification of Africa, managing a community of over 15,000 professionals active in this industry in Africa, and providing communication and marketing services, along with access to financing facilities. You are invited to know more by visiting our website at africanpowerplatform.org. Now I'll pass it to Daniel Zivitz, founder and CEO of Enerwhere, who will go through the agenda for today. At the end, Daniel will be available for the Q&A session. Daniel, thanks for joining us. We appreciate Enerware's trust on the African Power Platform to organize this session. The virtual stage is yours now. You may start your presentation, please.
Wonderful. Thank you, George, and welcome everyone. I think it's a great platform, and we're very honored to be able to present here. I will now switch over to the presentation that hopefully everyone should be seeing. And we'll start with a brief introduction of Enerwhere, particularly going through the 2 business models that we have. The utility or energy sales business, the solar EPC business, and the investment opportunity via the crowdfunding platform. So to give you an overview, Enerwhere is the world's first distributed solar utility, and we are also a leading solar contractor in both the Middle East and Africa. What do I mean by a distributed solar utility? I mean by that we sell electricity and cooling as a service. We sell these services primarily to commercial and industrial customers, so this is a B2B play, and we focus on customers with no or a weak grid connection. The company has been around since 2012 in Dubai, when we started with 3 people in not a garage, but a spare bedroom. Today we have about 85 people across 2 continents with offices in Dubai and Abu Dhabi and Nigeria. And we're preparing to enter a number of adjacent markets in the next 12 to 18 months. What makes us unique is that we are able to provide power not only at the side of our individual customers, but that we can do so very rapidly with transportable solar systems. In many ways, in the same way that the diesel generator rental companies like Aggreko are providing temporary power. And that means we can provide the same kind of service, the same rapid delivery, but of course with renewables, which is quite unique worldwide. We also happen to be the largest commercial and industrial solar company in the Middle East, with about 30 megawatts of solar contracted or under construction right now. I believe we also are the largest solar company in Nigeria, at least by megawatts deployed, where we have the 2nd largest solar power plant in the country. And we have a decent sized pipeline across a number of African geographies that we're hoping to push further over the next couple of months. From the outside, we've won a boatload of awards from various parties, from Middle East Solar Industry Association, from Forbes Middle East, And that's basically a recognition of the kind of specific projects that we do, but also of our general growth as a company. To jump into what we do for a living. As I mentioned, we have two businesses, the utility business, which is really what we started with. The original idea was to rent equipment, like the diesel generator rental companies, to replace diesel generators. There is one issue with those generators. They're quite convenient. You can deploy them rapidly. They don't cost a lot in terms of the upfront capex. However, they're expensive and they're extremely dirty. In fact, the carbon footprint of a diesel generator is typically higher than that of a coal-fired power station. And the emissions in terms of NOx, SOx, particulates are far worse. They also tend to be the most expensive power on the planet, with a diesel price of 80 cents to $1, which I believe is quite common across the African continent. You're looking at costs between 25 and 30 cents for a kilowatt hour from a diesel generator. And even if you're running a medium scale HFO plant for a mine, you'd typically be looking at 15 cents or more per kilowatt hour. And solar obviously can be a lot cheaper. We're sitting in Dubai, where the world's largest solar project is currently under construction, the 5 gigawatt Mount Rashid solar park. The lowest cost for a daytime kilowatt hour from PV here is about $2.4 cents per kilowatt hour. And the lowest price or tariff for a nighttime kilowatt hour from solar is 7.3 cents. Now, keep in mind that those are long-term power contracts. Those are 25 or 27-year power contracts with sovereign off-takers in an area with extremely good solar radiation, but nevertheless, this is very attractive. And we believe that over time, therefore, solar will be displacing liquid fuels, but not everybody has the ability to sign a 25-year power purchase agreement, and that's where our service comes in. So what do we offer? We offer, first and foremost, temporary power and cooling on a fully financed basis. That could be in the form of a power purchase agreement, where the client buys kilowatt hours that are directly comparable to a grid supply. Alternatively, in specific situations, particularly in the Middle East where the cooling loads are high, we can offer cooling, even on a per square meter or per room basis. And we're now experimenting with other pricing models for industrial customers. For example, crane running hours. We could very well think about offering pumped cubic meters of water as an offering. Basically, we believe that in many cases, our clients are not looking just for electricity, but they're really looking for an energy service. And there are sometimes multiple conversion steps between the basic energy input and the service that our clients require. And we feel that we're often better placed to optimize the entire chain than somebody who's in a hurry and doesn't have a lot of CapEx budget. Now, obviously, the applications, the exact service model depends on the applications. We've worked across a number of different industries. The largest one that we've been working on are camps. Those could be for various end uses. In the Middle East, it's mostly construction and oil and gas. In Africa, you're often seeing staff accommodation for mining, but also for large-scale construction projects. The aid and disaster relief sector deals with large camps, even if the energy requirements for those camps are typically quite low, in the sense that there's only lighting loads. Military is another application that can be quite large and that tends to be remote. So all of those things we can and we have powered camps of up to 20,000 people capacity. The other large ones are in construction, where individual applications go from air conditioning and lighting for site offices, across cranes, pumps, and all kinds of machinery. That is right now, we're talking mostly about stationary machinery, but over time, of course, electrification of the vehicles will require more power on that front. We've worked for the oil and gas industry, where again, camps is one of the larger users, but electric submersible pumps for aging oil fields is something that requires a lot of power. And onshore drilling rigs are also megawatt scale applications where people are looking for, where people are currently running diesel generators and where people are looking for more sustainable solutions. In Africa, one of the larger applications that we're currently working on is manufacturing. For example, in Kano, where our office in Nigeria is, we're providing power to a factory. They have a grid connection, but the grid connection works, or rather doesn't work, for several hours per day. So looking for a more comprehensive and more reliable power solution. And those industrial clients also often have large rooftops available, which make it easier to install solar. Hospitality is another sector, in particular islands or lodges, right, that are fairly remote, are great locations. And many of the solar battery projects that have been installed in Africa are for these kind of high-end hospitality settings where the clients also much value the sustainability aspect. And the final and probably one of the larger ones on this list is mining. That's where a lot of the attention has been focused in the commercial industrial sector in Africa in recent years. And I think one of the largest projects on the hybrid side is also for a mine, about 15 megawatts, simply because you can have very large loads that are in remote areas, but they don't necessarily run for 20 years. Life of mine of many of these plants is only 5 to 8, sometimes 10 years. And that means people struggle with conventional power purchase agreements where the basic assumption is that you have a 20-year offtake. And that's not really how the mining industry works. So it's diverse. It depends on the geography. It depends on the offtaker. But the beauty is that solar is quite modular, and with rapid delivery, we can cover all of those applications. Now, let's talk a little bit about the integration problem, right? Everybody knows solar PV is a straightforward technology. You have a couple of solar panels, you put them together with an inverter and a metal structure, and you're producing solar power. That works great as long as you have somebody else run the grid. And in fact, the solar industry globally has mostly treated the grid as somebody else's problem. In Europe, in the US, the initial deployments were all subsidized. The grid companies were forced and are still being forced to buy all of the solar power that's being produced, or all of the renewable power, and the balancing is left to the grid. Now, in a weak or in a small grid, you can't leave this problem to somebody else, right? Or dumping it on somebody else means the costs are not being reduced. So we, as a utility company, always assume that we need to optimize between the conventional power source and between solar. We need to make them work together. And in most cases, that means we hybridize solar with diesel, or solar with batteries with a diesel backup. In that case, the solar production is naturally bounded by the load. And you can kind of see the brown line here, which is basically the load curve of a client, typically higher during the day than at night, depends a bit on the application, whether it's cooling driven, lighting driven, or industrial. And solar in this case really acts as a fuel saver during the day, where the grid is formed by a conventional power plant, a diesel generator, HFO engine, or whatever. And any variations in the solar are being made up by the diesel, which, as I mentioned, limits the amount of solar power that can be fed in, but with a bit of optimization, you can get up to 30% straight from solar for a flat load curve, and more if you have a daytime load curve that is more skewed towards the daytime, a cooling-driven load curve. That's obviously only an interim step. As battery prices are coming down, we are moving towards more battery-heavy applications where you can charge the batteries during the day and then discharge at night. However, that is really dependent on the economics of the particular location. Basically, the higher the fuel price, the longer the contract duration, and the lower the cost of capital, the more economic it will be to integrate batteries, and therefore the higher the fuel savings can be. But fortunately, these systems are modular, so we can adjust this on a system-by-system basis, and even during the course of a typical contract, which lasts from 2 to 3 years. So let's take a look at how these kind of hybrid systems work together. In our case, as I mentioned, we typically sell kilowatt hours. So rather than selling system components to a client who gets involved in the engineering, we provide a service. And that service is reliable electricity. Hence, the client really cares mostly about what comes out of the energy meter. On the back side of the meter, we of course need to put all the components together. And that is, as I mentioned earlier, generators, typically multiple units synchronized. That means we typically choose smaller generators than others would in the same situation, because we run multiple of them at the same time. We integrate a solar system, and we often integrate batteries. And to make all of those components work together, we have our own hybrid power management system that is fully remote controlled. So we can take a look at any of our sites. We're currently running 14 mini grids across the Middle East. And we can take a look at that, whether it's in the Middle East, in Africa, or in Antarctica. As long as I have a mobile phone connection, I can look at that and basically not only view the plant at fairly high resolution. We typically have the ability to go down to at least 30-second resolution, in some cases down to 1-second resolution, but we can also remote control. That means we can switch over between generators. We can increase output, decrease output, in some cases even control loads, which means that you're able to react remotely and don't need to have a full senior team on site, but you can work with fairly junior resources on site, which is a great way to reduce the overhead costs, particularly for smaller sites. From a business model perspective, it's also worth mentioning that we're not just a solar company, right? The temporary power business is about providing reliable power day and night and just renting out panels, which is what we tried in the beginning. It doesn't really work in the sense that it's hard to rent out a car when nobody has a driver's license. Most industrial users don't care about the details of the technology. And that's not just industrial users. My wife wants her blow dryer to work in the morning. Whether the power is provided by a gas turbine, a steam turbine, a diesel generator, or a solar panel, it doesn't matter to her at that moment, as long as the power is there and it's reliable. So we provide the full power system. As I mentioned, that includes typically solar, often batteries. Sometimes we get downstream and provide air conditioning, but we also work on the efficiency of the conventional power plant. And when you look at our margins, I think it's fair to say that actually the majority of the margins do not come from solar. They come from optimization and energy efficiency, which is sometimes hard to sell because clients believe that they can do this themselves, or that it's like magic. But we find time and time again that when we install our data loggers and we really look at the details of what people are doing on site, there are a lot of optimization. There's a lot of optimization potential that people don't see when they collect 5 data points an hour. The typical diesel power plant that we see is run by a site operator, sometimes 2 if you have a 24/7 operation, who keeps an hourly log of what's happening. Right? What do they write down? For every machine that's running, they write down the oil pressure, the battery voltage, and if they're really lucky, the load. That's 3, 4, 5 data points an hour. Compare that to the actual data output that each device, whether a generator, an inverter, a battery system, or an air conditioner, produces dozens, in some cases 100 data points a second. And the information that's contained in there is quite substantial. By capturing this information at a much higher time resolution, as I mentioned, at least minute by minute, and in some cases we go on to second level, you can see things happening before they impact the plant. And that allows you, for example, to reduce the overcapacity on the plant. If you have a site operator that checks once an hour and one of your generator has a coolant leak, then the temperature of that machine will increase until the point where it trips out. And that means if you want to prevent that, you need to keep fairly significant backup capacity on site. If you have high resolution monitoring, you can look at the temperature of that generator over a minute on a second-by-second basis. And when the temperature goes up in a pattern that looks like a coolant leak, you can automatically start a backup machine and switch off the machine with a defect before it leads to a plant trip. again, much lower fuel consumption. You need less backup equipment. This is even more powerful when you look at electrical equipment like large motors, where you can sometimes see hours or weeks ahead of time where an electrical signature is slowly going bad, and you can literally identify those signatures. We're just getting to the point where we have enough data to start machine learning on these kind of data signatures, and you can identify that you can order spare parts before anything goes bad, particularly for a pump, for example, for an underground pump. That is quite an interesting option, and it's a value add that goes beyond just providing power. This is really a value added maintenance service that clients that have high reliability applications in mining, in military, appreciate a lot. So in summary, while we operate as a utility with both energy sales and energy services, the data is a very integral part of our value proposition, and that allows us to squeeze out efficiencies both on our side of the meter and on the client side of the meter, and thereby provide an overall value proposition. Now, how does this look like in practice? I'll walk you through a typical camp application. Now, keep in mind that this one is from the Middle East, where we have a very peculiar climate, very hot summers, very low loads in winter, but you'll find similar high demand and low demand scenarios in other climates. And as I mentioned, despite the fact that we're not providing 100% of the power from solar, the diesel savings can be massive. In this case, over 30% of diesel fuel and emissions, and more than 15% savings for the client. This is a remote staff camp for about 600 occupants with all the facilities that you need in a residential environment. That means kitchen, laundry, sewage treatment plants. The camp's operating 24/7, 365 days a week. And when we showed up, there were about 3 MVA of diesel generators running 24/7 with a very high fuel consumption. And what we did is we deployed within the space of a few weeks 350 kilowatts of solar. We installed our loggers, we installed our management system, and we were able to reduce the generators and during winter provide really 95% of the power during the day with solar, despite the fact that on this particular plant we don't yet have any batteries installed. Now, you might tell me that loading up the solar plant, loading up the system with that much solar is dangerous and will lead to trips, which is true, but that really depends on the weather, right? If you have a clear day without much cloud coverage, you can run without issues 95% solar, with a little bit of variation being taken up by the spinning reserve of the generator. If you have a day with lots of cloud cover and fast-moving clouds, this solar curve would look like somebody that chopped a salami. And on their days, you will have to curtail if you don't want to risk a bunch of system trips. However, even a small quantity of batteries would be able to buffer this. And you're typically looking at something like a 30-minute battery buffer to allow you to switch off a generator and run on 100% solar during the daytime. So it's quite feasible even under current battery economics. Now, again, this is the winter curve, and this is really what limits our solar at the moment in this scenario, because in summer, the loads triple. And at that moment, I can, of course, increase the solar capacity to cover the daytime peak loads in summer, but then I would really look at wasting 2/3 of my solar power in winter if I don't have massive battery capacity. And hence, we believe that this is not so much a technical issue, but an economic one that depends on the fuel price and the contract duration. And in a scenario with a higher fuel price and falling solar and battery costs, we will increase solar over time and therefore also increase the displaced fuel over time. So if I summarize, the key benefits of these kind of solar hybrid power plants, right? They're cleaner and cheaper. They dramatically reduce the fuel and emissions savings against the conventional power plant by 30 to 50% for a typical camp scenario, or let's say relatively load curves that is human behavior driven with air conditioning and lighting. For mine, you'd be looking at anything from 15 to 25%, assuming a completely flat load curve. And for something that is extremely peaky, like a crane, we have seen scenarios where with minimal battery capacity, you can displace 80% of the fuel. So there's always a significant saving to be had. Because we assume, and most users need this service relatively rapidly, we generally believe that we need to offer this service as a zero capex option. That obviously depends on the geography. There are some geographies, we've received requests from Yemen or South Sudan, where it's not easy to find an investor. But in somewhat stable jurisdictions, we're generally able to provide a fully financed service where the end user does not need to finance, among other things, because our systems are fully transportable. That means we can deploy them. We can run it for anywhere from 6 months to 5 years. And then when the client gets a grid connection or closes up their mine or whatever, we can reutilize that equipment elsewhere. And that means we're not bound by the tenor of the particular contract with our investment, but we can invest over the full lifetime of the equipment, which of course for solar panels is in theory 25 years. In practice, we assume it's more like 10. But nevertheless, that's a major step up from the 2 or 3 years that you would see in a lot of temporary power projects. The whole system is extremely modular and scalable. The smallest systems that we've built are around 25 kilowatts. The largest ones in the 10 megawatts range. So, right, and pretty much anything in between. And we've even changed the system size dramatically during the lifetime of a contract. So that's basically the beauty of solar and also batteries, which comes in a battery box. It's built for transport. You can add to it, you can subtract from it. And we do all of that, by the way, generally without foundations, right? We just drop ballasted systems on the flat ground. Saves you a bunch of permitting if you're close to civilization, and you're basically ready to provide plug and play power to the end client at a reliability that, while it doesn't really hit that one of let's say a European grid, is oftentimes much better than that of a conventional diesel generator system, or even that of an African power grid. So we believe there's an all-round better solution, and I think our clients have been seeing that. We've been doubling revenue every year since 2015. Have added numerous clients every year, and have gotten a bunch of repeat orders. So people take a while to understand how this works, how much fuel they save, and how this compares to the existing solution. But once they get over the newness of the solution, they sign up and they keep coming back for more. Let me pause here for a second, because I think we have a question from one of the participants. And the question is about solar lease models. What the benefits are of a solar lease model, or rather the difference between a solar lease model and a PPA, and I guess my view on that. There's two aspects, I think, that I'd have to look at here when I answer this question. The first one is that a lot of people simply take a PPA contract and change the word PPA into a lease, right? But where the underlying payments are still structured per kilowatt hour. In that case, to me, there isn't really any difference whatsoever between a PPA and a lease. It's just a legal way to get around what could be certain regulatory restrictions in some jurisdictions, saying that you can't sell power because there's a monopoly of the local utility, for example. But I'm guessing that's not what this question is aimed for. I think it's really about what's the benefit of leasing equipment, right? Like a dry lease in a let's say in a plain scenario, or in an empty rental of a house versus a fully furnished working, or what's the difference between renting out an empty apartment and a hotel room? And I think the key difference is the performance, right? And what you need to know about the asset. If you're leasing a bare piece of equipment, you basically have to assume that the user understands what they're renting, and they understand how to operate it, and what the trade-offs are of operating that equipment in different ways on the efficiency side. And again, that's fairly simple when you have an empty apartment or you rent a car, right? You know how fast it goes. Most people know how to drive. And you know you're going to use more fuel when you drive faster. But for some reason, despite the fact that the PV industry has been around for 40 years, most of the users that we're talking to are not familiar enough with solar technology to make these kind of trade-offs. And they're certainly not familiar enough with solar hybrid plans to be comfortable operating them ourselves. So while we started our business with a leasing or rental scenario where we were just an equipment provider, right? We found that basically just led to us being a free consultant for 6 to 12 months to explain to people how the equipment worked. And then they either wanted to buy it themselves or they were like, well, that's all nice, but I still don't want to operate it. Why don't you provide us with a fully wrapped service, basically a kilowatt hour or even an energy service. So I think long story short, we've tried the leasing model and our conclusion has been it doesn't work, right? The only way to get this kind of service into a market is to provide a fully wrapped service where one party is responsible for the complete operation of the system. And that means typically both the conventional generators and the solar. So one party can make the efficiency trade-offs, one party can make the reliability trade-offs. I hope that this answered the question. If there are any more, I'm very happy to take them now or also later. I don't see any right now. So let me maybe for a moment move on and talk a little bit about the kind of projects that we've done and the other half of our business model. So on the energy sales side, right, as I mentioned, we've powered island resorts, we've powered construction sites, we've powered a mining plant that's basically in this case, a concrete recycling plant, but it's the same thing as a mining plant. It takes big rocks and makes little rocks out of them. Camps, right? But that's not the only thing that we're doing. I mentioned we're also a large commercial and industrial solar installer. This is basically our EPC business where we install solar only or solar battery systems for clients that do have a reliable grid connection and don't have to worry about system operation every day. In that situation, we can offer our services as an EPC provider, so engineering, procurement, and construction. Plus, we offer operations and maintenance services. Or again, we can provide a fully wrapped service where the client pays per kilowatt hour. In that case, with a grid connection, the typical tenor of such an agreement would be much longer, mostly 15 to 25 years in Western countries. What we found is that industrial users in Africa are typically not comfortable with 25-year contracts. A lot of the conversations that we're having are going towards a 10 to 15-year time frame. That seems to be much more within the time horizon that people think about. And given the dramatic drop in solar costs that we've seen over the last 10 years, this is eminently possible, right? The payback times in many scenarios are now down to 4 or 5 years. So it is possible to run a leasing contract or a power purchase agreement for only 15 years and still have enough spread between the client savings and the paying back the cost of the equipment. So the 25-year, I think, would be an extreme case. From an applications point of view, what we see here in the Middle East is that the biggest demand for these kind of services tend to be manufacturing, warehousing, logistics. In Africa, mining would certainly have to be added to that. Those are the largest users because they tend to have space. They tend to have space on the roofs. If you have a factory or a warehouse, they tend to have space on the ground. Other commercial off-takers, office towers, small shops, and so forth, struggle because there's often not enough space in the middle of the city. There are often restrictions. Sometimes there's no net metering. So these services are not, the number of applications that we've seen here is not as wide. It's much more straightforward. But to be honest, it also doesn't matter much. The solar system, right, is pretty much the same. Either two or three versions, a flat roof, a concrete roof, and a ground mount system. And the ground mount system is what we see a lot for schools and universities. We just installed a 1 megawatt system on the campus of the Bayero Kano University in Kano in northern Nigeria on a former football field. And that's pretty much the same thing that we would do in an off-grid scenario, or just in this case, connected to the grid. Here's also a couple of references in the megawatt scale. These are across the Middle East and Africa. The smallest here is a 73 kilowatt installation that we installed in a factory in northern Nigeria as well. That's actually only phase one. The client just signed a contract with us to expand the system by another 450 kilowatts. So we'll be providing 100% of the daytime power for the factory with solar in about 6 months. Here in Dubai, we have the nice ability to use net metering and reverse feed into the grid, and that allows us to do much larger systems. We have a number of medium-sized system, a couple of hundred kilowatts, a megawatt that we recently deployed with a large installation of cleaning robots, but also much larger ones. And in fact, the system on the bottom left that we're currently building for a water bottling plant in Dubai is going to be the world's second largest solar rooftop plant, with a total capacity of 18 megawatts across 4 different roofs. That's obviously fairly massive. There are a few places in the world where you have rooftops that big, but obviously a large industrial offtake or even some university campuses would have that kind of load. So basically it's just to say that the commercial and industrial sector has a fairly broad range of sizes. Anything up from, for us, probably 200 kilowatt would be the smallest system that we would take on, and then going all the way up to 20 megawatts. That's really just a brief wrap up of the business models. Now, before I jump into the company, the financials, and the investment opportunity, there was another question that I'm seeing here. And the question is, what is your view on the potential of cooling in Africa associated with the agribusiness on an off-grid perspective? And if I understand the question correctly, this is really about what do you do about cold storage, right? A lot of agricultural businesses depend on getting their produce out to market at the right quality for the end consumer. That could be in a coastal city, that could be as far away as Europe. And if you want to have quality product out, you need to get you need to have a cold chain. Also for pharmaceuticals, by the way, on the way in, but those are much smaller volumes. So the answer is yes, that's absolutely possible. Cold storage has the big advantage that there is some thermal buffer. That means in a scenario where you have a cold storage warehouse, you can choose to run the entire system on solar, and you can probably get away with surprisingly little battery capacity if you're willing and able to use thermal storage. That could be with chilled water, that could be with ice, or that could be even with the temperature of the warehouse itself, even though you will have some restrictions there in terms of what you can do with your produce. But yeah, there's definitely potential, and therefore we're doing this for some of the plants in the Middle East. In fact, on the previous page, this factory at the top left, the Master Baker factory, is a bakery ingredients factory, a bakery ingredients plant. They store all the ingredients, including fresh eggs, in the plant. So they have large chilled warehouses in this plant. And we provide nearly 100% of the power requirements of the plant. So yes, lots of potential on that front. Another question that I'm seeing here, if we've looked at cogeneration opportunities for plants. Again, the answer is yes. However, it is surprisingly hard. There is a couple of industries where this makes lots of sense, in particular paper mills and cement plants. The only issue is those guys have already figured this out themselves because they've been doing this for over 100 years. So nearly every paper mill that I've ever heard of already, same for sugar mills, right, runs on their own waste, the waste products from the production. And cement factories in particular are large users of waste products that they burn. That can be tires, that can be heavy fuel oil, coal. So yes, cogeneration is attractive, but in the places where it's most attractive, existing users do this themselves. They don't wait for us to come along with a solar hybrid system. So The opportunities that we would see to implement this in our case would be more smaller scale, but that tends to be a little bit at odds with the deployment speed. Code generation systems are inherently more complex. They require downstream integration. And we mostly get called when somebody has a problem that they need to solve in the next 2 weeks or 2 months, which oftentimes doesn't give us the time to do a lot of engineering on the client side and how to integrate that with a cooling or heating system. So I'd say, yes, it's an opportunity, but not one that we've been involved in heavily. Okay, I'm not seeing any more questions right now. Of course, we still have some space later. So looking at the time, I'll move forward and talk a little bit more about the company and investment opportunity. A few words on the company in general, right? I mentioned we have about 85, 86 people right now across 3 continents. It's a very young team. If you remove the top row, the average age is probably 26, 27. That can be a handicap. Sometimes some of the older engineering directors ask the question of what that young guy knows about power generation. But we've got an extremely good team. We've got over 60 engineering degrees, including a PhD in solid-state transformers. These guys have built over 30 projects in the Middle East. That makes us, by our account, one of the largest provider of CNI systems in the region. Right, we're operating nearly 50 megawatts of power generation across our solar diesel hybrid plants, and we're building currently the world's 2nd largest solar power plant. So we've got a diverse team, 24 nationalities, from most of the places where we're currently doing business development. Right, we're rapidly growing, hiring about 5 people a month right now, and we're rolling out our offices to neighboring countries in the Middle East. Oman and Kuwait are on the near-term list. In Africa, we're working on opportunities in Zimbabwe, in Somaliland, in Mali, in Mozambique. So lots of expansion opportunities, and hopefully a lot more heads on this slide in the near future. From the outside, as I mentioned, we've been honored to be ranked by a number of awards across the Middle East. We've also achieved the largest crowdfunding raise to our knowledge in the Middle East and Africa, with over $1 million raised last year on Eureeca. And we get a lot of positive feedbacks from our clients saying, hey, this is wonderful. We want more of this. But let's talk a little bit about the challenges, right? And one of the challenges to our growth is funding, because lending across the Middle East and Africa to small and medium enterprises is limited. We still fall into that category. And that means our growth has been mostly fueled by equity. That is absolutely possible, but it's expensive. And the transaction costs are high. And this is really where crowdfunding can come in. We have small and medium-sized projects. That means we don't need $10 million in project financing for any individual project, but we need $100,000, $200,000, $500,000. And that's actually a fairly good fit with what a crowd does. So crowdfunding gives entrepreneurs access to capital, right? It provides validation and by lots of people of the business model, of the numbers. It in many cases enables us to access new markets. We have a lot of contacts with our investors, even the smaller ones who come with ideas or questions and saying, hey, why don't you go look at this market? Or here's an opportunity, have you looked at that? Right? It's basically a good way to talk to a lot of people in the places where we need to be. And at the same time, for investors, it's an interesting opportunity to invest in something that is otherwise hard to find in the investment universe. Of course, you can invest via conventional stock markets and lots of listed companies in Europe and the Middle East, but the kind of access to small and medium companies is hard to find, and that's where some of the coolest ideas are. So investors can diversify their portfolio. They get a steady deal flow on a crowdfunding platform, which also provides a regulated vehicle to safely invest in a smaller company like us. And the platform that we've chosen is Eureeca. They're registered in 6 countries. They're the number 1 crowdfunding firm in the emerging markets. investors from 42 countries, over 20,000 investors on the platform, 34 successful funding events. That's one of the biggest ones in the business, and we're the last raise that we did last year, the $1 million raise, was the biggest one on that platform. So we came back this year to do our next round. And to give you a feel what we've achieved with that funding, with the $1 million that we raised, it basically allowed us this year to increase our revenue growth and double our energy sales. The 90% is actually already outdated. We're hitting 100% sales growth there. In total, we're hitting over 150% growth if you include our APC revenue, driven by an explosion of our system sales business. That means we've been able to connect over 6,000 people. We've 10x'd our solar capacity, increased our CO2 savings, and been able to drive innovation forward. Robotic cleaning in the UAE, a key driver here, cheaper high-resolution data loggers. And we're starting to introduce 1.5 axis trackers. We've deployed our first battery system, solar battery system, actually the first power pack, Tesla power pack in the Middle East. So we've had a very positive experience with that, and based on that growth, we're just going back for a second round. And let's take a look at that, how that looks in numbers. So basically, in 2015, we had $1.6 million in revenue. We made it to about $3.5 million in 2016, and closed last year with just over $8 million in revenue. And this year, we're tracked to hit over 20. Somewhere in the range of 20 to 25. Depends a bit on whether or not we finish one of our projects at the end of December or in early January. But this kind of market growth is good. We don't think that 3x revenue growth is sustainable in the long term. It's very stressful for the organization, right? And the amount of capital that you need to raise is very substantial. So we're generally expecting that we'll be able to continue to double over the next couple of years. And the good news is that doesn't only drive revenue growth, it also drives profitability. We're very close to achieving break even this year for the first time, with a significantly positive EBITDA. And since our overheads are growing much, much lower than our revenue, we roughly doubled the number of people, but nearly tripled revenue this year. That means we'll drive profitability over the next couple of years. That doesn't mean that we're planning to pay out a ton of dividends in the first couple of years, because we are looking to invest that, but it means that we will drive the value of the company further. And to do that, we want to invest in, first and foremost, assets. As I mentioned, most of our clients are looking for zero capex solutions. They're just looking for power or for cooling. That means we need to finance those assets, and debt financing is still hard to come by. We're getting some access, but not yet enough. So the first slice of funding will go towards asset investments. At the same time, we also want to push our investment in data analytics and IP on the solar side. So we'll deploy some funding there. And depending on how much we raise, so the crowdfunding raise is only step one. We're in the middle of an institutional fundraising round as well. We should bring in a few $1 million early in 2019. That will also go towards additional working capital to accelerate our growth on the EPC side. So for now, more geared towards assets, which have very good returns. To give you a feel right now, the payback time at the current oil price of $60 a barrel, and the solar installation cost of about 50 cents a watt peak internally, right? If I put panels on a flat piece of sand here in the Middle East, the cost of that deployment is about 50 cents per watt peak, or $500 a kilowatt. And if you put that together with a 25 cents per kilowatt hour revenue, then the payback time of that asset is under 2 years, which means we generally are able to return our capital on the first temporary power contract, and then we can turn that money around and use it again on the future phases. And that means the overall return over a period of 10 years, which we kind of expect the economic equipment lifetime to be, is over 30% at the asset level. And even after operating costs, we believe that this makes for a very attractive business model. Now, if you believe that this is an interesting investment, how would this investment actually work, right? Obviously, if you're a smaller investor with a few $100 or even a few $1,000s, we're not a publicly listed company in the sense that you just can go and buy a few shares. So what the crowdfunding platform Eureeca does instead is they create a holding vehicle, which in this case is a British Virgin Islands holding company, which owns the stake in Enerwhere Limited, our holding company, which is registered in Abu Dhabi Global Markets, so basically in an offshore jurisdiction. And you as an investor will invest and hold stakes in this holding company. And as part of that, you then own a share of a slice in Enerwhere. One benefit of the platform is that they, of course, guarantee the due diligence, right? They do all the legal structuring for you, and they create this vehicle. And they're also planning in the future to add trading capabilities to that platform. So while right now this is obviously an illiquid investment where you invest in anticipation of future growth of the company, at some point we're planning to be able to offer liquidity either through a secondary platform like Eureeca or through a buyout from a larger party. There are a number of European utility companies that are actively investing in the distributed energy space in the Middle East and Africa. There's also always the possibility of an IPO that would probably require us to grow to beyond the $100 million of revenue. So I don't think that's something that's going to happen in the next 2 years. But over a 3 to 5 year time horizon, which is what you should target as an investor here, we believe that your investment should appreciate substantially and that you should then be able to liquidate your holding by selling your shares to either other investors directly in the company or to an external party that takes out the minority investors. That's the overall view. There is a lot more information on this. We have a video, we have numbers, all of it on the Eureeca website. So before we stop and go to the question session, I'd invite you to click on the link at the bottom of this presentation, or if the link doesn't work, just type in eureeca.com/Enerwhere, and you can access the full proposal. We have already raised over $575,000 in the last 3 weeks by 34 individual investors. We, from last year's experience, will probably end up with over 100 investors and hopefully in the range of $700,000 to $1 million over the next 2 months. And we'd like to join you to ask you to join us to accelerate the rollout of distributed energy and cleaner energy across the Middle East and Africa. Not just only with your money, but if you have ideas, if you have business opportunities, please let us know. You can write us at investors@enerwhere.com and let us know what your ideas are. I'd say from my side already, thank you very much. I'll take a break here right now, and I believe George will now open it up for questions. Thank you very much.
Okay, Daniel, thank you very much. Yes, I'll be glad to give you a break. You have done a great work so far. So let me just get back to the screen. And yes, I have a couple of questions more here. And thank you, Daniel, for the enlightening presentation. I'm sure that Enerware's future is bright and presents a great investment opportunity. So regarding the expansion plan and the forecasts for the growth are very positive. Enerware is already present in Nigeria. What are the plans to grow in Nigeria and in other African countries?
Yeah, sure. So the growth plans in Africa are significant. In Nigeria, we've built up a pipeline of over 50 megawatts of industrial opportunities, primarily in the north, that means in Kano and Kaduna State, plus some opportunities in Abuja. and if people ask why the heck do you go to Kano and Kaduna, don't they have Boko Haram there? The answer is no, they don't. Right, there's quite a geographic distance between Kano and the let's say more troublesome areas in Nigeria. But more importantly, the solar radiation obviously gets dramatically better as you move away from the coast in Nigeria. And while pretty much every other solar company has chosen the concrete and other jungles of Lagos and the Delta for their business, we figured that we'd maybe start with a solar resource, and look where people need industrial scale power in a place that actually has sunshine. And Kano was by far the best place for that. That's where we've built our first megawatt of power, and that's where we have a pipeline of in the order of 50 megawatts. We've signed a few additional contracts, so we'll be rolling out additional plants there, both solar only and solar diesel hybrid plants over the next couple of months and years. So that's on the Nigeria front. On the broader African continent, I think it's still fairly opportunistic. And the reason for that is that there's about 54 different markets, and that's actually just the 54 different countries. And in many of those, you have subsegments. And there's obviously a lot of money flowing into rural electrification, pay-as-you-go solar, and so forth. But that's our game, right? We're in the industrial space, and that means we need to look at where our clients are. And the segments where we believe we have the most value to add are probably mining, oil and gas, and the industrial sector. And most countries don't have 100 or 100 potential clients or sites where you can do that. In most countries, you have large industrial areas in 2 or 3 cities, often the capital, 1 or 2 inland cities, and you've got significant mining operations that are not grid connected in a handful of locations. So at this moment, we drive less of a, let's say, regional country focus and much more of an industry focused with mining, oil and gas, construction, and industrial plants at the top of the list.
Okay, Daniel, thanks. That was clarifying. Also, regarding now the crowdfunding round that Enerwhere is going through, we suppose that since it's an equity funding, it's based on a valuation for the company. So the investors will take shares on the company through the nominee, through Eureeca, but it's based on a valuation. How did you come up with the value with that company valuation at the moment?
Yeah, good question. So the key thing to recognize, I mean, we didn't just make this up. The first thing to do an evaluation, which is always a bit more of an art than a science, is to look at alternatives, right? And there have been a couple of recent transactions in our space, notably that Aggreko bought Eureeca last year for about $50 million. We've seen Engie buy a company called Electro Power Systems, a French-listed company specializing in microgrids. And that was also last year. And we've seen Wärtsilä by Greensmith, which is basically also a battery systems management company in the US. And for all of those transactions, you've seen revenue multiples of between 5 and 10. So if you put that on our trailing revenue of last year of $8 million, in theory, you run up with a valuation of somewhere between $40 and $80 million. And we're quite similar to all of those players in size and also in profitability. In fact, all of those companies were loss-making right last year, so were we. We're now breaking just even. We're also growing somewhat faster than those players. And if you take the midpoint of that, you'd already be quite close to where we are. But on the other hand, you can also take a look. We've year to date through October had over $60 million of revenue. So we've basically doubled since last year. And if you take the valuation that's on the platform right now, $65 million, we're actually only at a 4x valuation compared to that. So basically, there are some comparables. You can also do a bottom-up valuation of our future cash flows. You come up to even higher numbers. We put all of that together in a discussion with a crowdfunding platform, and the answer was $65 million. You can certainly argue about left or right, but if you compare to other parties, what other parties are playing in this sector, I think this is actually quite conservative, and happy to go into that in more detail if somebody wants to have a very detailed look at the numbers.
Okay, Daniel, thanks again. And I suppose also that doing this funding through a platform like Eureeca, there is some due diligence and the numbers are checked, and that will bring some trust to the investors as well.
Sure. I mean, the crowdfunding platform has obviously taken a look. Maybe more importantly, we have internationally recognized auditors from PKF. So all of our numbers are audited. We've also have more than 200 investors between the equity and the crowdfunding platforms that we've used, many of whom are based in the Middle East, have come to our offices and checked. So I mean, I'd say, look, we're not some kind of fly-by-night operator. We're very transparent in our numbers. We're internally fairly transparent in the sense that we've got an integrated ERP system, NetSuite, Oracle, where we have access to live numbers. If you're worried about Nigeria, right now only about 5% of our business is in Nigeria. So, right, I think the risks are manageable. A lot of people have looked. And for any investor who's seriously interested, we're happy to sign an NDA and provide audited financials and recent management financials for people to take a look and check us, come visit us, take a look at one of our sites, and or give us a phone call. And I'm fairly certain that we'll stand up to any level of due diligence.
Okay, Daniel, thank you. So, regarding the financing needs for next year at Enerwhere, the amount you are raising now at this crowdfunding round, it accounts for which percentage? So what are your needs for next year, and how will you cover that?
That's a good question. It's not that easy to answer in the sense that our funding needs are somewhat variable, right? We have the ability, because I don't rent equipment, but I sell power. I have the ability to provide power without capex, in the sense that I can just rent myself a diesel generator to provide diesel power. That is not ideal, because I'm obviously losing a lot of my margin. I can still make some through energy efficiency, but I don't have a one-to-one relationship between my revenue and my funding level. So that said, if I have an unconstrained growth scenario where I just double, then we're looking at somewhere close to $10 million of total deployable funding, right? That would generate the optimal profitability and allow us to grow at full throttle. Not all of that will have to come from equity. We expect that at least 3-4 million of that will come from that. And that's where we're currently really looking at different funding models, right? We're on the crowdfunding platform for what is a fairly short and predictable process for the next couple of weeks, where we're expecting to get in anywhere between $700,000 and $1 million. But we're in numerous discussions with institutional investors, which will hopefully bring in another several $1 million in both equity and debt, let's say over the next 6 months. And then we have a track record of adding on transactions to that. We've raised about $8 million in total for the company over the last 4 years. And most of those are in transactions between a few $100,000 and $1 or $2 million. So basically, we are in the market with different funding sources. If we can bring in one of the big boys that we're talking to, that's absolutely wonderful. If not, we'll continue to raise money from private sources to keep growing, right, and make ourselves more attractive for the bigger players.
Okay, Daniel, thanks. We have passed our time for 5 minutes, so I'm sorry to the participants that are there. We have just 2 questions here left, so I didn't want to close without addressing them, and just ask Daniel, please, to try to do like a very quick answer to this. I suppose the first one is not easy. What is your cost per kilowatt hour to compete against grid on over 10-year contracts? So 10-year PPAs, I suppose. So I suppose this is a very hard question to answer.
Yeah, it's really hard to answer because it really depends on the grid and the location, right? I mean, the 2 or 3 inputs in a solar levelized cost calculation that really matter is the price of the grid, or the contract price, the duration, and the cost of the solar system and the solar radiation. And obviously, the solar radiation would be highly variable between the forests of northern Rwanda and and let's say the Algerian desert. But let's say for a 1500 kilowatt hour per kilowatt peak generation, which is, for example, something that you would see in Abuja or in maybe Ghana, and let's say in $800 per kilowatt, which I think is achievable for a 5 to 10 megawatt project. You're looking at the payback time, and let's say you assume a grid price of about 10 cents, which isn't unusual. Then you're looking at a payback time of about, you're looking at revenues of about $150 per kilowatt peak per year, right? And if you have installed costs of 700, you're looking at a payback time of 4 to 5 years, which also works out to a low teens return. Yeah, I'm not sure if that answered the question, but a 10-year PPA fundamentally should be possible with the right financing settings in a place where the solar radiation is decent and the grid price isn't overly subsidized.
Okay, Daniel, thank you again. And the last question here, so I think Daniel also addressed this somehow. So are there any plans to expand the business to Southern Africa, particularly to Zimbabwe?
Yeah, the answer to that is yes. We are working actively on a few projects for a large cable factory in Mozambique. We're working on a mining opportunity in Zimbabwe, and funnily enough, we have some equipment in Zimbabwe that's currently in storage. It was for an agricultural project where the client then didn't have ultimately the opportunity. Their business went down substantially, so they weren't able to take that plant. But basically, yes, we are working on a number of project opportunities across Southern Africa. Zimbabwe, I've been a couple of times. Lots of potential, even though power isn't that expensive and the currency situation is obviously tricky. Mozambique has lots of potential. Botswana has significant potential both in the mining sector and on the grid, even though regulation is a bit more difficult. We're looking at opportunities, and we're happy to look at additional ones if anybody has ideas on that front.
Okay, Daniel, thanks. So we are now ready to close this session. Thanks again, Daniel, for joining us today. We are sure Enerwhere has a successful and bright future ahead. And thank you as well to all the participants that took the time to join us. Hope you have enjoyed and finding Enerwhere a good investment option. Enjoy the rest of the day. I don't know, Daniel, if you want to do like a final address to the audience. From our side, we are ready to finish.
Yeah, sure. I think, again, just thank you very much for attending the webinar. I hope this was interesting and informative. And if you have any questions at all, please do click on the Eureeca link, eureeca.com, and then /Enerwhere, or write us at investors@enerwhere.com, and we'll try to get back to you as soon as possible. I'm also happy to get on the phone in the coming days to discuss in more detail if you're interested. Thank you very much.
Okay, thank you. We'll share you later the link to the recorded session so that everybody can rewatch it if needed. Okay, bye-bye.
Thank you.